Hey everyone, in this video I'm going to highlight 4 reasons why Alphabet is my top stock to buy right now. So without further ado, let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the number one reason why Alphabet is my top stock to buy right now is the total addressable market for advertising. According to Statista, global advertising will amount to $874 billion in 2023. That was up by 6% from $826 billion in 2022. Their estimates suggest this figure will surpass $1.1 trillion by 2028. A growing share of that spending is moving to digital channels like YouTube, Google Search, and Instagram. Digital advertising totaled $522 billion in 2021 and is expected to reach $836 billion by 2026. It's understandable that digital advertising will grow to take a larger share. This type of advertising can be more targeted, focusing on a specific group in the population, like 22-year-old male college students or 34-year-old females with children. It's also easier to measure the effectiveness of digital advertising. How many people clicked your Amazon advertisement and made a purchase? That would be informative. The companies that will benefit from this trend include Alphabet, Meta Platforms, Netflix, and Pinterest. Additionally, companies with popular websites like Amazon, eBay, and Walmart will benefit as marketers will seek to influence the purchasing decisions of shoppers. So now that you understand the massive opportunity, you can see Alphabet at trailing 12-month revenue of $307 billion still has room to go despite its phenomenal increase in revenue over the trailing 12 months. Of course, Alphabet generates most of its revenue from advertising, and in fact, its Google search engine has a dominant 81.95% market share worldwide, even though Google has been losing market share to Bing and Microsoft ChatGPT. It still boasts 81.95% market share, which is the strongest market share of any product or service that I know of in the world. That's how strong Google's market share is in the search engine market. The second reason why I think Alphabet is my top stock to buy right now is the pristine balance sheet. Alphabet has $110.92 billion in cash and short-term investments, and the current interest rate for short-term government bonds is above 5%. So Alphabet can generate over $5 billion per year in interest income just with this cash balance. $5 billion in profit just with investing these investments in government bonds, super safe government bonds. So companies try to generate $1 billion, can't even do it. Alphabet can generate over $5 billion in profit without even moving a muscle, just making a click and putting this money in short-term government bonds. Another thing the company can do with this cash is buy back its stock, which it has been doing. I want you to understand why average diluted shares is important. The number of shares outstanding is an important financial metric. If a company issues more stock because it is running out of money or it wants to invest in a new growth project, it has the potential to decrease your earnings per share. Look up here, when I have a net income of 1,000 and shares outstanding of 100, my earnings per share is 10. You take the net income divided by shares outstanding and you get 10. But now let's say you increase your shares outstanding to 200 and you have the same net income of 1,000. Now your earnings per share is just 5. The same is true in the opposite direction. If a company is losing money on the bottom line and it issues more shares, it spreads out the losses across more shares, thereby reducing the loss per share, which is a tricky way to reduce the loss per share. Look at this point here. A net loss of 1,000 with 100 shares outstanding creates a loss per share of 10. But if you take that same net loss of 1,000 and you spread it across more shares, 200 shares, you now have a net loss per share of just 5. So it's a tricky accounting trick to get your losses reduced on earnings per share. So you want to take a closer look to see where the improvement in the loss per share is coming from. So now that you understand the importance, you can see Alphabet has reduced its shares outstanding from 14 billion down to 12.59 billion over the last 5 years, doing the opposite of diluting shareholders. The third reason why I'm going to highlight why Alphabet is my top stock to buy is the customer value proposition. Alphabet generated a 27.42% operating profit margin, and its operating profit margin has remained above 20% for the better part of the last decade, even going over 30% at one point. And it did this by offering mostly free products. YouTube, Google Search, Google Gmail, Google Sheets, all of which are free to customers, and yet Alphabet generates billions in profit and generates over 20% operating profit margin. That's an incredible customer value proposition to be able to offer your product for free and still generate billions in profitability. That's so difficult to do. I can't even explain how difficult that is. And Alphabet's ability to do that makes it one of the best businesses in the world because the customer value proposition is so good. How can you even get better than free, right? What's competition going to do? They can't make it cheaper than free. So Alphabet has made it an incredibly lucrative customer value. And that's why people keep coming back. People keep using Google Search and Gmail and YouTube because it's free. It's free. You can't get cheaper than free, and the quality of the product continues to improve as Alphabet uses some of that advertising revenue to continue enhancing the product and making it more and more useful to people worldwide. And the last but not least, the fourth reason why Alphabet is my top stock to buy right now is the cheap valuation, the relatively cheap valuation. Alphabet is trading at a forward price to earnings of 18.05 as of this recording. And given the excellent business characteristics, the lucrative business model, the customer value proposition, the total addressable market, the pristine balance sheet, all of which I would be willing to pay a higher price for Alphabet stock, but I can get it today for a forward PE of 18.05, which I think is an incredible bargain. I recommend this as the top stock to buy in 2024. I also own Alphabet stock myself. So I really think this is an excellent value, an excellent risk versus reward for investors in the stock market. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.